Hey guys, Blair Nightingale here, 6 o'clock. It's time for Market Monday. We're going to dive right in to something completely different today. We've never done this before. This is going to be an interactive session at the end. So you're going to want to stick around for that. Today, looking at paper trading. Paper trading, very important part of the process of becoming a consistent trader. Okay. I had a session earlier today with our Faith and Finance Challenge 2.0 students, where they're really diving into the foundations of the Tradeway stock trading system. How do I know what to buy, when to sell it, and how to protect my money? Like our friend Myron Golden likes to say, the reason we have a JOB is because our money is unemployed. So we learn to employ our dollars to go to work for us. That is the skill set of trading. That's what enables us to be able to do. Was working with them today and going through parts of the system and talking about getting to the place where we are able to be reliable, right? We're able to understand what to do, but we've got to go through the mechanics to get there. How can we do that without taking risk with our money and making mistakes? Because we are going to make mistakes. Paper trading is a part of that process. As our friend Jeffrey Nance likes to say, we got to trade better before we trade bigger. We've had lots of conversations here in the last few weeks about how traders tend to think of it backwards, right? They think money, profit before they protect their capital. Doesn't sound quite as fun in one way, but when you're trading, it's a whole lot better. So we always want to do things in the right order. Learning to trade better before we trade bigger is very important. Lots of people going out there into the markets and just throwing money at the markets, right? Based on a hunch, based on a tip, based on a news article, based on how much they like a company, whatever it might be. It's not based on actual probabilities in that trade. Now, that doesn't mean everybody's not going to make money if they do that. They might make money, but being able to consistently apply something to the markets over time requires that we have a good process. But how do we practice that? Like I said, we're going to paper trade. And I'm going to get you guys into this today. As much as you want to be involved here, this is going to be an opportunity to do that. Of course, as always, you can chime in, Facebook, YouTube, friends. You can send in your comments right there in the comment box. Let me know who you are. Ask any questions you might have as we go along. This is your opportunity to learn or ask a question about the markets, trading, money, anything like that. You can go ahead, send it on in. I'd be happy to answer that. And with that said, we're going to go ahead, dive into it. Paper trading. First of all, what is paper trading? When I say paper trading, sometimes this could be called virtual trading, but mostly it's referred to as paper trading. Now, paper trading is literally just going through a virtual trade that risks fake money, right? Virtual money. You have an account that allows you to place a trade, but it just doesn't end up being a real trade. It just simulates it. That's another word for this, is simulated trading, right? It's based on real market activity, real market movement. It's just that we don't actually buy any real stock. It's just virtual. So it helps us in one way because we're able to be a participant without actually risking any money when we're not confident in what we're doing yet. Okay. That's what paper trading, virtual trading, simulated trading is. Okay. Benefits versus limitations are something that we really do need to look at, because paper trading, it helps us in one way, but it doesn't in another. Now, what do I mean by that? Well, trading is something that the skill set of trading, it's very fun. Believe it or not, I know some people don't think this is fun. I don't understand those people, because trading, being able to put your dollars to work, getting into the markets, seeing the opportunity, looking for patterns, drawing lines. I drew a line on a chart today. It still amazes me. Okay. I got into a specific position. I set up an exit point on this particular position. And At one point in the day, one of the lines that I had placed on the chart, now you've seen me work in and out of charts here on Market Monday. One of the lines I placed on the chart as a potential area of support. Remember, support and resistance are the two lines we draw. Support being below, resistance being above, like a floor and a ceiling. I drew a potential line of support. And while this does not happen very often, I will say, rarely is it this close. The stock dropped, and to the penny, it hit that line and turned and went the other way. Charting works. Trading works. We just have to learn how to work the skill set. Now, what I said to the students in the class earlier today that I was talking about a moment ago is that, certain parts of trading are actually extremely simple. Anybody out there intimidated by the idea of trading, intimidated by the idea of risking money in the stock market? Stock trading rather is never guessing, gambling, or going for it. We're not guessing with our money. We're not gambling with our money. And we're not going for it where we're throwing money at the market and hoping that it sticks and does something we want it to do. That is not trading. Okay. Trading has a process, a system of defined steps. And that might sound really wordy or even maybe complicated, but actually trading is really simple. You say, well, Blair, if it was so simple, how come not everybody is successful at it? Well, I would say two things. Number one, most people don't even try to learn. As a coach at Tradeway, that is one reality I see on a fairly regular basis. I see students who start and I see students who skip, right? They don't start, right? They don't even dip their toes in the water to really see what it's like to become a stock trader and to begin to learn that process. So that would be the first thing. The second thing I would say, if it's so simple, then how come everybody's not doing it, is because there is one piece of it that is not simple. There's one piece of it. And as Dr. Jim said when he was on with us a few weeks ago, sure, we can find parts of the market that are very complicated, right? There are certain things that we can complicate and they're technical, but it doesn't have to be. It doesn't have to be complicated. But one piece that is complicated in stock trading, you know what it is? It's you and me. It's you and me. You and me are the complicated piece. Our emotions in our trading, our fear and greed, right? Our mindsets, our habits, right? That's the more complicated part in trading. What does this have to do with paper trading? Well, some of the limitations of paper trading is that it can help us learn the process, how to push the buttons, how to get confident and comfortable with something that's brand new, buying a position in virtual dollars and letting it play out the way that we would as we learn in the Tradeway stock trading system to see how we did, right? You get to take this system and put it to work without having to risk real money and just see, where am I at with this? That's a huge benefit. What's the limitation? It doesn't trigger your emotions, right? Paper trading virtual money doesn't trigger any emotions. And I always tell people, very beneficial, especially when you learn a new strategy, right? We teach multiple strategies here. And so if you learn a new one, even if you're just starting, right? That's a new one. Then you should paper trade. You should start out by paper trading and make sure you're doing it correctly, okay? But then paper trading has a limitation because it doesn't actually show you, show me, how am I going to manifest emotionally when money is at risk in the stock market? See, that's when things they don't have to, but they can get unpredictable, right? Because people sometimes, here's an example, have a much harder time controlling themselves to do the things that they know they should do. Why? Because we teach them. Because they're afraid, right? Fear can change our behavior. Emotions can amplify our behavior. So we help people work through that too, right? If we're going to help somebody be a trader, we've got to help them through that process. But paper trading doesn't so much do that. However, it's a very valuable tool to test out anything, get your feet wet, get into the process, start practicing. Paper trading is a huge benefit in that way. And when you're just new, it's very exciting, right? It's very exciting because it's like I tell people riding the bike on the grass, right? When we're little and we learn to ride our bike, we can learn to ride it on the grass. It's not as fun in some ways, but it's also not if, but when you fall over, you got a soft place to land. And that's how paper trading works, okay? So it has its pros, it has its cons, but that is paper trading. How do I paper trade? Well, there's two ways, and I mentioned them already. Two ways to paper trade. The first one is, as I said, you can do actual virtual trading, okay? So this will be in real time. The markets will be open. You and I could go open a virtual paper trading account, okay? And we would actually, let's say, buy XYZ stock tomorrow morning at 9 a.m. Central Standard Time. And we would have the system in place, right? We need to learn the Tradeway system so I know where to buy, when to sell, and how to protect my money if the stock goes down, right? That's very important. But I would already have those three numbers and more. So I could go in, I could do a paper trade, and then I can let it play out until I either take a loss on the trade, which is normal, by the way. We want to win big, lose little, and we teach you how to do that in the system. But we would let it play out until we either hit our profit target or we decide it's time to exit the trade for a small expense. That is something that we do all the time. So you could actually do that in real time, right? You test out your strategy. Let's see, I've got a comment here. It can see you could have potentially, I love this. I'm going to put this up. Somebody out there's paper traded before. That's what this makes me think. It can help you see if what you could have potentially profited with real money. The funny thing about paper trading, we used to have a coach here at Tradeway, Mark Wilburn. Some of you guys know Mark Wilburn. He would say he did one paper trade when he very, very first started, and he saw the money that he was going to make in that paper trade, realized it was just obviously, I mean, it was something that he could do, but it was a virtual trade. So he didn't make real money. He made fake money, and that was it. He said, all right, when it comes to this strategy, I'm never paper trading again, right? He never wanted to do it again because he thought, well, if I can do that exact same thing with real money, then at least I'm going to make something. And that's fine by me. Listen, if we get confident in what we're doing and we want to switch over to small money, that's part of the process we take all our students through, right? That's what we want to do. We want to start with paper trading, get that comfort, confidence, and then move over to real money. And then even then, we start small. We don't go crazy, right? We start small because you want to start to trigger some of those emotions and see what that does. Remember, I said that's not going to trigger with paper trading so much. Sometimes it can be a little emotional in paper trading because you want to know that you're doing it well, but it doesn't necessarily mean it does the same thing as it would when it's real money on the line. So your comment is 100% true. And I've, of course, felt that way too, just paper trading. You know, you might get in a paper trade and go, wow, I did really well on that paper trade. Enough of this. I'm going to go and get out there. But I'll say one more time, it's important that I see your comment there, Jeffrey. I'll come back to that in just a second. It's important to say that, you know, paper trading and small money trading can feel quite different because the emotions kick in. So always be cautious when switching from paper trading practice to real money trading because there is an emotional component that kicks in, and that is where most people need the most training. And that's something that we do with our folks here. Jeffrey says, howdy, it's 88 like a piano in Colorado Springs. I spent the afternoon playing the piano here. So that is very welcome to me, Jeffrey. Thanks for being on tonight. Everybody out there, I know we've had some people join in since I last mentioned. If you've got any questions as we're going along, go ahead, pop them into the comment box there. Questions, comments, concerns, anything can go in there. You can just drop your name in and say hi. That's fine by me. Go ahead, put that in there, and I'll keep checking back on that. Today, looking at paper trading. First of all, just looking at what is it? Okay, what is it? And then we're going to go in and we're actually going to look through some charts and just do some paper trading. Okay, I don't have any preloaded charts, perfectly lined up for the purposes of paper trading here. So we're just going to go in and look for a couple. walk through. And that takes me to the next part of this session, because I said there's two ways to do this, right? You can go in and you can virtually trade. Okay. Where do you do that? Most of our students who do virtual trading with a major broker, right? The company that helps you buy and sell stocks. They do it with TD Ameritrade. Okay. TD Ameritrade has their Think or Swim platform. That is their stock trading platform. It has their charting software. It has the ability to execute trades, but within it is a paper trading function, a paper trading platform. So it's the exact same thing as their normal money, if you will, their real platform, right? Where you and I are going to trade real dollars. It's the exact same thing. It's the exact same thing, but it's virtual, right? It's virtual dollars. I believe they give you something like 200,000 virtual dollars to start with. And you can adjust that, right? You can adjust that. And it's good to take a paper account like that and put it at or near the place that you feel like you would begin trading, right? Now, you can go out with $100,000 and $200,000 in stock and go ahead and paper trade. But it's nice to make it as close to your situation as possible, because you want it to benefit you when you're actually trading real money. And even though the emotions of it aren't going to so much be something that transfers from, virtual trading to real trading, like I said, that's not going to be the same when you do one versus the other. But you're going to approach the market at least somewhat like you would if you only had X amount of dollars in there. Now, if you've got $200,000 you're normally going to be trading with, then keep it at $200,000, right? If it's 80, 100,000, if it's 10, if it's 5, whatever it is, you can set it at that level. Now, TD Ameritrade is not the only place that you can do that, okay? But that's a big one that a lot of our folks use. Of course, over here at Tradeway, we're big fans of Tastyworks. We love Tastyworks as a broker. They're good friends of ours, and many of our students, including myself, use the Tastyworks platform, but they do not have a paper trading function as of right now. I believe this is not a direct message from their company. I don't represent them, but I do believe they are planning to have a function like that at some point in the future, though I cannot comment on that further. So we'll see what happens with that. That is one kind of paper trading. Okay, that's one kind of paper trading. You say, Blair, how are we going to do some paper trading on this webinar if virtual trading is real time, right? The market is closed right now. By the way, a lot of virtual platforms, you can't submit orders on them after hours. Some you can, some you can't. I don't know what it is on Thinkorswim. If somebody out there uses Thinkorswim, then you could go ahead and put that in the comments. But anytime I've used it, you can't do that. So how would we do this? We're not even in market hours. Market closed at 3 p.m. Central Standard Time. Well, that takes us to the second way that you can paper trade. The second way you can paper trade is just going back in time. Use your charting software, go back in time to historic results, right? And look to set up a trade, okay? First thing you want to do, using the system, find market tone, right? If you don't know what market tone is, you got to get into the step 1 Start Your Journey class. Okay, we use a 3-legged trading table. What happens to a table? It's got 3 legs. You take one of those tables off, it's going to fall over. So we want to have good trades, and the start for us of a good trade has 3 different things, and we call that the 3-legged trading table. One of those things is market tone. Market tone is so important. So we are going to start by looking at that. I'll give you a quick description once we get into the charts. Then we want to find a pattern, right? This is the process. We want to find a pattern. You say, I don't know any patterns. Again, you got to get into that step 1 Start Your Journey class. That's where we're going to teach you the patterns. How many shares am I going to buy? How much risk should I take? That's the next thing we've got to decide. It's a paper trade, but we still want to get as close as we can to real trading, right? So we got to decide. I'm not just going to go out and buy fake 1 million shares, right? We want to get an idea of what this is really going to do for us, okay? If we take an expense on the trade, I want it to be close to what would be real. If we make money on the trade, I want it to be close to what it would be if it was real, right? That's going to help me feel like I'm getting to the place where this is actually looking like it's going to look when I'm trading in real life. Okay. And then what we do is, since we're back in time, we're just going to click the screen ahead one day at a time. Now, there is a real difference here, okay, in doing historic versus virtual trading, because any mental or emotional, I hesitate to use the word struggle, any mental or emotional activity that happens during a trade, even a paper trade, really happens during the day as the price of the stock is moving up and down. With historic trading, we don't really see that, right? Because we're just going one day to the next. You'll see what I mean in a second. We're showing a whole candlestick, and then we're just going to the next day, and we can see the whole day immediately. So this is a really simple, easy way. That's the benefit of paper trading with the historic charts. But it's also a lot different, right? It's not that live second by second trading. So it has that pro, but also it has that weakness to it as well. But that said, it still can be some good practice, and I'd like to do some of that with you guys here today. So I'm going to go ahead, pull up my screen as always. We'll get some charts going, and then I can show you how we do this. So if you have oops, I just reshared the same screen, didn't I, guys? So that if you have this, you can also go out and do some practice, right? This is what you want to do. Now, we got a lot of lines on here. Why? Well, because some of these new lines were drawn at a later date, right? This is not, you're not looking at today's date right here, okay? I'm actually back in time. We're actually at April 16th, okay? April 16th. So I am looking at a chart. I just went with the S&P back in time. Now, I talked about market tone. I'm not going to go entirely into how market tone works here, but I am going to tell you that I want to see the market bouncing at support. That's what I want to see. The most basic example of that, bouncing at support. Now, it's been bouncing at the 50-day moving average. Okay, a little bit below, closes above 50-day, and up it goes. So would you say the market is at support, or is it at resistance today? Is the market at support, or is the market at resistance? I'm going to give you guys a second here to go ahead and let me know what you think. All right, some of you maybe don't know what that exactly means yet, and that's okay. That's okay. And I know there's a little delay, so I'm giving it a second. Right? There's a ceiling and a floor. When the stock hits the floor, it tends to, but is not guaranteed to, move up. Right? When the stock hits the ceiling, it's not guaranteed to, but it tends to fall. Joseph Perry says we're at resistance, and he's right. Right? Joseph is right. Ding, ding, ding. Okay? We are closer, at the very least, to resistance. Now, nothing is resistance until the stock actually begins to fall, right? When the stock begins to pull back and actually sell off, then we know there's some resistance there. Okay, so I'll go back to my chart here. In fact, I'm going to take... Actually, I don't think I can do it that way. I got to do it this way. You guys can't hear me. So you have more room on the chart. So we are not at support. So all I do is hit the right arrow key on my keyboard. Now, you may have different charting software, okay? So it may work a little bit different in terms of the actual keys you need to press. I want you guys to catch the basic idea here. I've just gone back in time. And however I can progress one day at a time, I know Telechart works the same way, then that's what I want to do, okay? I'm looking for a move back to support. Now, these blue lines are new. I know that because this is my chart. So I'm not really worried about the blue lines because I didn't really have the blue lines drawn yet, okay? So did it find some support there at that white line, that 20-day moving average? It sure did. It sure did, and it had been doing that for a while in there, okay? But I'm really looking for a hit at support. So we had a bigger move down, okay? There we are. Now, what do I not like about that day? Well, what I don't like is it's not bouncing. there's no buyers, right? There's no buyers. So we're going to go into detail about what's really important for an entry in the step one class. Okay. I keep mentioning that today because we don't have time to go over all the details. And while we give you guys a lot of tremendous information on here, it's definitely something that we spend 2 days going through with students who really want to learn the system. You got to have some skin in the game here, right? We want to work with people who are going to take the system and really run with it. It's a minimal investment to take the step one course, but it's a little bit of an investment. And we hope that the return to you is so much more than what you ever put into it. That said, we go into detail more in the step one. But here we are at support. We're certainly near it, right? But there's no buyers. There's no buyers. There's no wave to catch. As the old saying goes, don't try to catch a falling knife. Let it hit the floor, right? Don't put your hands in danger. Let it hit the floor. Let the floor do the work. And then if it stops, then maybe we can talk, okay? So let's go another day forward. All right, so we're starting to see it bounce up. Now, I'm not going to get into too much technical talk on how would you know what's going to happen now, what's the best time to get in the market. Market tone is a conversation beyond the scope of what we're going to do today. But I'm just going to look at this chart and say, I was looking for a bounce at the 50-day. I got it here. I got it here, 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 and here we are now. So what am I going to do? I'm going to go to my charts. I'm not going to change the day, right? So I'm still on the same day that I was on before. Now, this price down here is showing the current price. So you have to ignore that. That's August 30th, rather. Okay. So what we're looking at here is now the 13th of May. So what am I going to do? I'm going to go through and I'm going to look for a pattern. Okay. Remember, we've got some lines drawn on these charts that are potentially older, in some cases newer, because they'll show in perpetuity, right? They're infinite on the chart. So if I drew them on August 30th, which is today, we would still see them even though we're looking at May of this year. Okay? I don't like that. It wasn't a nice pattern, but I don't like that because it's been getting killed. That one's going down. That one's going down. That one's starting to go up, but it's been going down. That one's going down, down. Now, getting into the specifics of a good pattern, okay, getting into the specifics of a good pattern, obviously that's something we do in the step one, start your journey as well. I mean, we spend that time on that. But what I'm looking for here is something we call reliable, predictable, repeatable, okay? So here we could have something in Facebook. Why? Because we've got an uptrend here. Still a little early, a little sloppy. What I would do is I would go through my list and I wouldn't necessarily just go ahead and paper trade the very first stock, okay? I'm going to go through the list and I'm going to pick all the ones that are even close, right? I don't want junk. I don't want junk. And that's why I got to get better at finding good patterns, right? We'll teach you to do that. However, I'm going to go through and I'm going to find the great patterns and I'm going to put them in a watch list, right? I'm going to put them in a watch list and I'm going to keep going. Right? That's what I'm going to do. I'm going to keep going. I'm looking at this guy. I'm thinking, all right, what happens if I do this? All right. Now, what's the problem? Well, it's not at support, right? Maybe this one goes into a watch list for me, but it's not at support. So I'm not that interested today. I don't want to buy this today, right? It's potentially right at resistance. So maybe I put that one in a watch list, but I'm not trading that one today. It might be ready in 5-6 days. I don't know. GameStop and so on, right? This is what I do. Now, I will admit, I've got it kind of zoomed in pretty close here. You got May, April, March, February. I would normally have it zoomed out more, 7 to 8 months. But if I do that, it's going to show a lot more of the future here. And that defeats the purpose of what we're doing. You could set that initially a little better than I did so that you can see more history without, ruining the limitation, right? We want to limit what we can see on this side because this doesn't work if we know the future. So when you know how to find patterns, you go in and you go, okay, patterns. Okay, we bounced here. Wicks went down here. We bounced here. We might need to wait for this to come a little bit lower. Okay, this is one you could watch a couple of days, right? Because why? We haven't seen the buyers come in yet. You might put that in your list. Okay. And you see what I'm doing here, guys? I'm just going through. This is the process. Finding trades. I'm not going out and reading CNBC to find trades, right? I use the skill set I have to find opportunities myself. Okay. And I definitely think being zoomed in this far is kind of an issue, but this is literally what we do. You say, well, Blair, you're going through a lot of charts here and you haven't found a whole lot yet. I've found a couple, okay? But it's not abnormal for me to go through many charts and not find what I'm looking for, right? I may go through all of these charts and find only 3 or 2 stocks that I'm really interested in. Now, I can come in, draw some lines, see what we got, see that's further down, keep on moving, right? I just keep on moving. Now, when you find a pattern, now just for the sake of, it's too bad that blue thing is in the front there. When you find a stock, here's one of the limitations of paper trading. Okay, I want to show you this. Let's just say this stock bounced at the 20-day, which it did, right? This white line. Now, remember, we looked at the S&P, and the S&P went up, right? We got an up day on the S&P. So we said, okay, this could be a good day to buy the stock. Well, what happens here? It shows us the whole day, right? We would have wanted to see this in the morning. We wouldn't have let it go all the way up. So when you're paper trading, it's helpful to go in and take a reasonable entry point if you're going to say, I'm going to get in that stock, right? A reasonable entry point. You wouldn't want to get in all the way up there. But I also don't go, oh, I would have got in at the very, very lowest price of the day, right? Try to be a little more realistic than that. And then you can ultimately, if you choose to paper trade that individual stock, you can do that from there. Okay. And I just keep going, right? And we found a couple. So if we need to go back up to those, that's okay. We can do that. Very steep, right? Bouncing up off the 10-day. And you say, well, Blair, this watch list, I could do this. Has a lot. Oh, no, I want to do this. Here we go. Interesting. This is not organizing them properly. That's funny. These are expensive stocks. Well, knowing how to trade options is a part of that, right? If we know how to trade options, we're not limited unless we have a significant amount of capital in our accounts. We're not so much limited because we can use the leverage of options to trade these bigger stocks without having to pay so much money, okay? Without having to pay so much money. So you can come in and look for a trade that way. Let's just get this out to clear it. Okay, so for the sake of being able to go into the next part of the process, let's just go back here, right? So what did we have? We've got a stock. It's bounced several times here. It's at its 50-day moving average. It's bouncing up. So you could say at this point, if you wanted to buy this stock, now, like I said, this isn't my favorite chart, but let's go ahead and walk through it. The reason it's not my favorite chart, by the way, is because we're really kind of going on some future data, right? We're going on a line that comes into play more so later, even though it does come into play somewhat here. It's just kind of messy, right? This comes all the way down here. This doesn't. So there are much better examples of patterns. In fact, I'll show you a few once I get back to regular current day is what I'm trying to say. So you would say, okay, I'm going to buy how many shares, right? There's 3 major questions that we need to ask to have a good trade. 3 major questions. I'm going to give you one of them right now. I need to know before I enter the stock, where am I going to buy it? And how many shares am I going to buy, right? Where am I going to buy it and how many shares am I going to buy? I don't want to just buy it when I end up buying it. I want to know the amount of money that I plan to spend on a stock the night before, right? The night before I even go to buy it. Now I got to wait for the morning to see if it's actually moving up to buy it, but I still want to premeditate, right? I want to premeditate. So you would decide right here, all right? Let's say we buy it at 305 and we buy, let's say, one share. You buy one share. Resistance is up here somewhere around 323, okay? Maybe higher. So we stand to make, almost $20 a share, right? On one share. We're just trading one share, keeping it simple. Or you say, no, we're paper trading. I don't want to do one share. I'm going to do 100 shares, right? Now, this is a higher dollar stock, but then you just click to the next day. And then when you click to the next day, you go, okay, what am I going to do this day? Are you still in it? Are you going to get out? You want to lock in profits, right? Now, there's two other questions I mentioned that you've got to have for a great trade, and that comes into play here as well. But for now, we're just looking at what is my entry, and then I'm going, when do I want to get out of this guy? Okay, so here we are. Okay, and then the next day goes by. Are you still in it? Am I still in it? We want to have a basic trading plan. We want to stick to that plan. Ooh, see, that's the kind of day where people start going, uh-oh. I gapped up on this day. I made some money. Starts going down. Can you imagine maybe somebody's getting emotional at this point? Might be. Trade's not over. Trade's not over, right? It gaps all the way down to support and has a nice big bounce up. Okay? And follows through again the next day. So every day I'm looking at whether or not I'm staying in, whether or not I'm getting out. Okay? Boom. So right there, right, we've now come up to this previous level right here. And again, we need to have a conversation about how I get in and how I get out to really do this full paper trading experience. By the way, the last day of the step one event, that is what you do, right? You spend that whole last session going through the full paper trading experience. And there it goes up to there. We're almost up to the high that it was at last time. So it's almost as high as it went the time before, right? So in here, we have to learn some skills about where and when we would take profits, okay? Starts to go sideways, and now we have matched that high, right? So this is done great, but there were some swings along the way. So we want to know, how would I respond? How would I behave in that instance, okay? And ultimately, just going through the motions, clicking forward, and Facebook just starts to trend at the 20 and goes off and away. We bought it down at the 50-day. Thankfully, it followed through, and that is the paper trade. At some point, you decide when to get out, right? And then you can write down, what did I sell for? I try to be realistic, right? I'm not going to sell at the absolute high of the day, okay? I try to be realistic, but you want to get somewhere close in there, somewhere reasonable. For those of you that are trained on this, then you know that you can ultimately see where I would get out before I even get in the stock. I'm just reading some comments here, so this is great. Kenneth says, thanks, Blair. Great stuff. Oh, this is awesome. Thanks for that comment there, Ken. Ken, I think you changed your name. So I was going to say, we've got a couple of Kens here. Good to meet you, Ken. Thanks for being in here. Brian, resistance, right? And you were right. It was resistance. But again, that's what I thought on Friday. Yeah, the market's been performing really well. So Jeffrey says, how many watch lists do you use for your personal trading? That depends. I've got several different things. So I'll say this in short, okay? I've got multiple lists depending on what I'm doing. Some of them I just use for information. Some of them I actually trade, okay? Now, that statement might seem a little strange, but some of them just help me know what the market is doing, and some of them I'm actually looking at stocks to trade. So, like I said, here's the big point. You can take a bigger watch list, go through it, find good opportunities, and then take those good, which may be out of a list of 50 stocks, you may find 3 or 7 or 2, depending on the day. Sometimes there's more, sometimes there's less. It's not totally abnormal that you don't find a great trade. It's not abnormal. We don't need to trade every day. I was literally thinking about this while we were at the gym earlier this morning. We don't need to trade every day. So it's okay to come in and just say, I'm not going to trade. But that said, right, to get back on point, you got a bigger watch list, you pull that down into a smaller one that I call a go list. And you can then use the go list from there, okay? So I might have a bunch of watch lists at one time, but I have basically one master list, and I'm only trading a couple of stocks. I'm not out there trading 9 different stocks, right? I may have multiple positions at one time, but still only in a couple of stocks. And even then, I tend to focus on one stock at a time, one stock. Now, that's not to say that every Tradeway coach does that, but I fixate on one stock at a time because it has certain things that I like. So let's see. S&P 500 and Bitcoin beat pot stocks. Well, there's no doubt the S&P 500 is performing very well, as I said. As a new trader, how many watch lists would you recommend? Well, you know, in our introductory program, our Insider Plus membership, we've got several watch lists for you. So we really just do one for stocks, okay? Because really we're sensitive to the price range. If we're going to have, the straight up transaction where we're buying the shares, okay? We don't want to be trading a $250 stock, right? You could just buy a few shares, but we like to have some of that leverage. So we go to a lower dollar stock, not penny stocks, but we go lower dollar. So that would be one. If you learn to do other strategies, options, some of the advanced strategies that we teach from there, which are very beneficial, well, then we have different watch lists for that. That opens up a lot of opportunities. We not only teach how you can make money when the stock goes up, we teach how you can make money when the stock goes down. We also teach how you can make money when the stock goes sideways. We teach you how you can make money if the stock has earnings. We have all kinds of good stuff, right? And we can use a different watch list for each of those. It's not meant to be complicated, but if you learn more tools, then you can add a watch list to that list, okay? Veronica, if my buy, actually, I'm going to skip that, Veronica. I'll come right back to that, but I see a follow-up question, and I want to jump to your question and stay there for a second. So let me knock this out too. Realistically, how much time would a new trader need to set aside to devote to trading? People ask me that all the time. I was just in Tampa, and we were with a bunch of new students, right? We've had 3 meetings in Tampa this past month. First one had 150, second one had 200, and this last weekend we had 50 people there. So lots of new people. Most of them ask me that same question. And here's what I say. For me, it's more about consistency than quantity. It's more about consistency than quantity. It's more about getting into it every now and then and actually grow. I say every now and then, every night, every couple of nights, some amount of time to go in and learn the skill of stock trading, okay? And not maybe just one day every 2 weeks that has 3 hours, right? That's going to be doable. If that's what you have, that's what I would say to do. It's just going to be slower. Quality is a part of it. Quantity is a part of it. Consistency is a part of it. Quality is going to come from the training. If you want to maximize your time, leverage us. That's how you maximize your time. You can't get your time back. You can replenish your money. You can't replenish your time. So leverage us to help make the most of that time. That's quality. Consistency. Whatever amount of time you can do, just decide on something consistent, semi-consistent, right? If I talk to somebody and they're saying, Blair, I can put in 30 to 45 minutes of this 3 to 4 nights a week, that's a great start. Now, quantity. If I did more, wouldn't it be better? Yes, to a degree, right? You can overdo it, believe it or not, but more would be better. When I started trading, it was just a specific season of my life. I did have a lot of time. So I leveraged Tradeway, quality, quantity. I gave a lot of time to it, and consistency. But most of our students, most are very busy. They're very busy. They're still working full time. They've got a family. They've got responsibilities. And so this is something that we have to make work with our lives, but it's a very important skill set. It's worth the time. So if you can do that, if you can say, all right, with my life, I can be consistent with X amount of time and commit to that, and I'm going to leverage Tradeway so I get the most out of it, that's how you can really be moving forward, as Myron likes to say, further, faster, with less work. That's what I want you to do. Veronica, if my buy and sell alerts go off in the middle of the night when the market is closed, should I respond immediately to lock in prices or wait till the market opens? Okay, so Veronica, when it comes to the U.S. stock market, I was setting alarms on my phone this morning, okay, for a position that I was in. The alarms went off for me as the market was moving, and the market was moving because the market was open. So in the middle of the night, the U.S. stock market is not open. Okay, it's not open. So you should not be getting any alarms for stocks in the middle of the night. Now, if you're buying futures, Bitcoin, any kind of crypto, Forex, right? If you know what these are, you know what these are. If you don't, then obviously that's not what you've been trading. But any of those things, they have different hours. In most cases of what I just said, it's 24 hours. Futures are 23. So the markets are open almost all the time. But that's not true for the stock market. Monday through Friday, 8:30 to 3 p.m. Central Standard Time. Okay? So you shouldn't be getting alerts in the middle of the night. Okay? If you are, then you may want to delete your app and reinstall it, because you shouldn't be getting that. Okay? So thanks for that as well, Veronica. That's phenomenal. Thank you to everybody on here for some excellent questions. Excellent questions. I hope this helps you. Something very practical to start practicing, right? And you know that if you need to know more, that's a great place to do it. Tradeway.com. You can go to that step one, start your journey. It's right there on the main page. You can do it online. You can come, you can see us. We've got them happening on Fridays and Saturdays all the time. You can take the whole course. And if you're still not convinced, who are these Tradeway people? What are they really about? I need to spend more time with them. I'm going to pop a link for a free workshop, okay? A free workshop into the chat box. And we are specifically going to go over a stock trading strategy. We're going to look at covered calls. Some of you know what that is. Some of you do not. Your broker considers covered calls, which is an option strategy, safe enough where if you are allowed to trade stocks, which is the lowest level of approval, right, they will also let you do covered calls. So if you're interested in learning more about us, learning more about trading and a specific strategy and some of the thoughts we have around that, make sure to sign up for that webinar. It is free, okay? It is free. We do that so you can learn. We do that so you can see who we are. And we hope to have as many of you on there as possible, because I'm a little surprised, to be totally honest, because I'm not going to be on that webinar. That is not me. That's our friend Jeffrey Nance here at Tradeway. And for him to go into an option strategy on a free webinar, I'm surprised. So you may want to go over and check that out. Veronica says, your charts look great. Do you usually keep it on the 9-day or monthly view? I do not. I usually have it on a daily. I will check the weekly. Very rarely I will check the monthly, but I do keep it on the daily, right? Every day I'm doing that. I use some smaller time frames as well, okay? But Tradeways is a swing trading approach, which means we do about 2 to 3 days to 2 to 3 weeks, and that is our time frame, okay? So we don't day trade here. We do have some strategies that we teach our advanced students that are closer to day trading, but they're not true day trading, and so we don't actually do that, like I said. And I'll close with this tonight. We've got a lot of folks out there. They're busy, right? They're busy. They're looking for a way to cause their money to grow. Our good friend Myron Golden says the reason we have a job is because our money's unemployed. People come to Tradeway and they say, Blair, teach me how to employ my money. I've heard about the stock market. I know it can be powerful, but I don't know how to get in on it myself, right? I want to employ my money too. Some of you want to get out of the job you're in, right? Some of you have a business, but the business owns you. Some of you are not ready for retirement. Some of you have a lot of tuition payments coming because you've got babies and maybe they're grown and it's time to go, and you're looking for a way to provide for that. Trading can be so many things to so many people. So let us help you move forward, have that skill set, and we do it in a way where it actually can fit into your life. And that's why we don't do the day trading so much. Okay. Everybody, I appreciate having you on. This is Market Monday. We're back live 4:30 Thursday, Stock Talk Thursday, end of the week. Just a quick webinar where I'm going to come on and I'm going to show you the things that have been hot in the market. I'm going to show you the things that are getting killed in the market. We want to stay away from that. And I'm going to show you what the one most important news item is, because the news out there, they want to flood you with all kinds of junk because they want you to read their news. But you don't need all that news. All you need is to know what the one or two major news items are that the market is paying attention to. Wall Street doesn't pay attention to all the noise. They tend to gravitate towards one, maybe two news items. I help you know what that news item is. I don't dance around it. It's not in code. I just tell you what it is. So join me on Thursday for that, and I will give you that information right near the end of the week. That's our one-stop shop, Stock Talk Thursday. See you at 4:30 Central Time. Then that wraps us up for Market Monday tonight. Thank you guys for being on here. Really appreciate every one of you. Like this if you want to get more broadcasts in the future. Share it, tag some friends, send it on over. Somebody else somewhere needs this message, and I would be thrilled if you would go ahead and pass it on to them as well. Jeffrey says, I want to stop being an employee and start being a major contributor. Okay. And you could just fill in the blank there, right? We all want to contribute at a greater level to different things. Now we can do that in ways that's not financially, but so many of those ways are also financially. So that's what we want to help you be successful at. Come see us at Tradeway, tradeway.com. Sign up for the link. Thanks so much, everybody.